This lesson you will learn about the main strategy of the smart money concept, trading follows the trends. So in this lesson you will learn about smart money concept map follows trends, and the second thing, what you should focus to trade. I will guide you step by step how to trade with the smart money concept. And the last one is the example to understand about the trading strategies. So let's get started. The first one, smart money concept map and follow the trends. I will separate the screen by the three columns. The first one is a market simulation, and the second one I will guide you step by step what you should do when you see the market like this. The third one is research after this step. And when you open the chart, the first step you should do is analyze structure in the higher time frame. Normally, if you analyze and trading with smart money concept, you should choose from the 2 to 3 time frames. I recommend you only use 2 time frame is enough for smart money concept. And for example, for me, I always compile 2 time frame is 50 minutes time frame and 1 hour to analyze. Therefore, in this case, I will analyze the main structures to see the total picture of the market in the higher time frame in the 1 hour time frame. And after I analyze structure of the market, what I want to have here is obviously structure of the market. For example, on the left side is a higher high and higher low very obviously, and that is up movement. And the second step you should analyze at this time is to define the BOS and the CTS. And for example, we have here is the CTS, the recent high of the market, and the BOS, the lowest low create the highest high of the market. And you can understand that at this time price already break the CTS and still above the BOS. It means that the trend at this time is still up movement, and the direction we should choose to wait at this time is buy orders. And the third step is we'll analyze the first pullback of the market. You can drawing the Fibonacci from the low to the high to see whether this structure is a strong structure or the weak structures by using the Fibonacci, whether this pullback come into the discount zone or the overzone. If the price come into the discount zone, it means that this structure is very strong and the price can continue after these structures. And if price not come until this zone, it means that the structure already weak, and at this time you need to wait more the confirmation, or you can skip this market, just trade in the strong zone to get the highest consistency. And the fourth step at this time you check the second pull way. It means that this way you can see that here is the first pull of the market, and here is the first pullback, and here is the second pull way of the market. And at this time when you check the second pull way only, you should to check whether we have the imbalance over here, because we trading with smart money concept. Therefore, the imbalance way is really important, and the first signals. If price cannot create the imbalance in the pull way, you can skip the trade at this time, because that is not the market we're looking for. As the last step, we define institutional candles. Why you should define institutional candle? You also know in the POI or the order block lessons, we should define the order block or POI zone. That is the zone we're looking for price pullback and follow with smart money. And you can draw in the Fibonacci from this low to the BOS, and the BOS or the POI zone will within the Fibonacci from the 61.8 to 80% and cover all the institutional candles. That is the first step you should understand and analyze when you open one chart with smart money concept. And in the second thing, at this time price already pull back a little bit, come into our POIs. And what you should do at this time, the first time you analyze the structure in the lower time frame. For example, in a higher time frame I analyze is 1 hour, and at this time my low time frame is 50 minutes time frame. If you analyze in 4 hours, at this time lower time frame is 1 hour. And what I want to have here is obviously structures. And at this time you can see that in the low time frame I can see here is structure of the down movement, of the pullback movement, lower low and low high. That is a down movement. And the second step at this time I want to have is a define BOS of the pullback way. And for this simulation, you can see here is our POS, and therefore if price still below if this POS, it means that trend of the pullback wave still down movement. It also mean pullback wave still not finished or still not end. Therefore, the third step I want to looking for this time is a wave price break the POS, and result I want to have here is a real break. What is a real break? You also learn in the pullback and the breakout lesson. And after price breakout of the POS, at this time what I want to looking for is to define the POI, the second POI zone to entry. The first POI zone is a zone we want to price come and break out of the POS to say to me and you that the pullback wave already finished. That is the time we can entry, because at this time we follow completely with the trend and very low risk at this time. If you analyze about the POI, you can looking for about this way. The first time the price come from the first POI to break out the POS. If this way also have the imbalance, that is a very strong pullback. But if this way cannot have the imbalance, no problem, you still can entry at this POI, but you also can select to trade with this way is a bit imbalance. That also of the case is a very low risk of the market, because at that time smart money join completely into the markets and they want to push market very fast, and also of the case get the highest consistency and highest win rate in the markets. But normally you can see that this way is not of the imbalance. That is total about the smart money concept, follow the trend. So next I will guide you about the example to understand about these strategies.